our job is to invest long term. So don't think about what's going to happen in 12 months. Think about what could happen in 5 years.
What did you learn during the Asia financial crisis?
I learned a lot about leverage, contagion, and margin calls. For me, it is about finding quality at bargain prices during economic and geopolitical concern and downturns.
I've heard you talk about investment journaling.
I journal usually every month, and I feel that we can learn a lot from others, but it's even more powerful to learn from ourselves.
Hi, I'm Mike Gitlin, and welcome to another episode of the Capital Ideas Podcast. Today, I'm joined by Winnie Kwan. She's an equity portfolio manager based in Hong Kong, 24 years at Capital Group. Welcome, Winnie.
Well, great to be here. Thank you for inviting me, Mike.
So before we start, I will embarrass you. Morningstar named you one of the female portfolio managers of 2024. So congratulations.
Thank you.
That's a great honor. And I'm thinking about us meeting each other a quarter of a century ago.
Yes.
And sitting here now with one of the portfolio managers of the year. So very, very humbling, I'm sure, but great for all of us to see that.
It's really a teamwork. And, it's, as you know, it's got, I do a little small part in this.
Well, a big part, but let's start with you joining in the year 2000.
Mm-hmm.
And just after the Asian financial crisis, amidst the dot-com bubble, tell us about joining Capital Group.
Okay. Well, I joined Capital, as you said, in the year 2000, and I had worked at Morgan Stanley in investment banking and investment management in London, Hong Kong, and Singapore. And I think that's when we met in 1990, late 1990s. And in my formative years, the Asia financial crisis was a big part, and I learned a lot. And we're going to talk a little bit about that later. But at that time, I was very impressed by the analytical rigor of some of the folks at Capital. And I was like, wow, this company sounds, from the outside quite mysterious, but very well respected, especially by company management.
Right.
And I was particularly impressed by how the associates were taken care of during the Asia financial crisis. And so I dug a little bit deeper, just as an analyst does. And Noriko Honda-Chen told me all about Capital.
And Noriko's one of our management committee members today, still with us.
And a great friend of us.
Both of ours.
Both of us. And I was very impressed that Capital allow analysts to invest money, typically coach to become an investor of their own style. And more importantly, always work in a collaborative environment. So that was like super attractive to me as a setup, as an investor. And so after 30 plus interviews in multiple locations, I was lucky to get the job.
That's great. Just 30 interviews, just the low number of 30. So Rob Lovelace says to you when you're looking at Asian small caps, he said, the region is your oyster. And I think that's wonderful, but it's a very big region. How did you go about that job?
So you're right to point out that Rob Lovelace was my first research director, and I spent 4 months sitting next to his office in Los Angeles and learned a lot from him. And so at that time, I had a very slightly different coverage compared to a lot of analysts at Capital. I was a generalist, and so a lot of investors actually start off doing like a particular industry, but I was given the remit to do a broader kind of stock picking job at Capital, and I loved it because I always wanted to be more of a generalist. And so I was covering telecommunications at that time in my previous job, and I was particularly focusing on China and Southeast Asia. But since Rob said the region is my oyster, and I was like, oh, I really wanted to look at other regions. And so I started with my first industry review covering telecommunication companies, and I recommended 2 companies. One is a telecom company in Thailand, and the other one is actually, interestingly, a private and to-be-listed company in India called Bharti Airtel. Now, Rob could have said, Winnie, don't bother with the private companies, why bother? We have all these other companies. But he was just like, no, do what you think is the right thing to do. And he really trusted my instinct, and which I still very much respect. And I was also lucky enough to work with our private equity colleagues and got to know the management really well. And so did a review and invested and got a pretty good allocation at the IPO, only to find out that the stock then at the IPO went down 30% because it was kind of like around the dot-com time, and there was contagion to a lot of tech stocks in Asia, including India. But then we bought more stocks. Thankfully, the portfolio managers didn't lose faith. And the coverage changed of the company over time. And now the stock is still held in the portfolio after so many years. Then, India
what did Rob say? But when it went down 30%, did Rob say anything to you? Did he say, stick in there? Did he say it happens to all of us? What was his words of wisdom during that time?
Yeah, I mean, I think Rob has always been saying, like, look, our job is to invest long term. So don't think about what's going to happen in 12 months. Think about what could happen in 5 years.
Right.
And so that really has, and I think in his podcast, he talked about, time is our advantage. And so, when the stock went down 30%, an analyst covering the stock for the first time.
Brand new to capital.
Thinking my job is on the line. That was really helpful. And so then, because India was a market which was very cheap at that time, hard to imagine now, but, it was very disliked, unlike China, which was very, very much loved at that time. So a group of us went down to India and then, looked at a lot of stocks, turned a lot of stones and kicked a lot of tires. Some of the stocks didn't work out, and because the market was so difficult, we learned our lessons, but some of them really did work out. And one of the stocks which I fondly remember recommending was a company called Asian Paints, which is a nationwide, very well-managed consumer paint company in India. And when we first bought the stock, it was 500 million market cap at 13 times earnings. And I thought that the fair value for the stock was going to be 15 times, but the market, continued to be very, rewarding the company, doing a very good job in growing the business and capital allocation. And so, again, coverage changed over time, but I believe that the stock is still held in some of our portfolios.
You were investing during the Asian financial crisis, and at Capital Group, years later, you became a research director, and then we had the global financial crisis. What did you learn during the Asia financial crisis that helped you guide analysts through the global financial crisis? Because it was jarring. When markets drop 50%, it's jarring. How did that help you? How did that instruct you to guide them through that difficult period?
Yeah. Well, Mike, I remember you were also in Asia during the Asian financial crisis. So you would have remembered some of those really kind of important lessons, right? And so I learned a lot about leverage, contagion, and margin calls. And you remember that the Asian financial crisis first started in Thailand in 1997. The currency started depreciating because a lot of corporates were borrowing in US dollars, and they were generating revenue in baht. That caused them overnight, when the currency depreciated, to the companies from being levered to be very, very levered, and a lot of bankruptcies happened. And at that time, the market participants were saying, actually, this is just going to be contained in Thailand.
I remember.
And that didn't, but surely that spread to Indonesia. The currency then depreciated even more, and then to Korea, with the Korean credit card companies, and then to the rest of Asia. So
Philippines as well, I remember.
There you go.
Yeah.
So, it was such an important lesson because I learned so much about how financial dislocation can have a contagion negative effects, which today is still very instructive. But more importantly, in 1999, coming out of the crisis, there were just some once-in-a-lifetime opportunities to invest in companies that gave us a lot of returns. And so for me, the big lesson was in the Hong Kong Monetary Authority bought back all the stocks that everyone was selling into the market because everyone thought that the Hong Kong pact was going to break. I don't know whether you remember.
Yeah.
And they
Which
bought all
still
the
exists
stock.
today.
Exactly.
Yeah.
And they bought all the stock and from all the market participants, and we were selling the stock at that time too, thinking that, okay, this is it. We did such a good job, only to know that it marked the bottom of the market. And now that became the tracker fund in Hong Kong. So fast forward now to the global financial crisis. So I just became the research director, and the global financial crisis happened. But what was so helpful was the pattern recognition that I learned during the Asia financial crisis. And luckily, in Asia, we had a few people who went through that. And so as a team, then we immediately pull out the workbook on looking at, kind of mismatch in duration and debt, contagion effect, starting doing company analysis, very deep dive on working capital sustainability and funding sources. And that was really helpful. It helped us avoided a lot of companies that went down a lot and some went to zero. But more importantly, when it went to extreme, and this is how capital was just so helpful, we had a lot of portfolio managers working with the analyst. And the crescendo of it, I remember so clearly, was when the market started selling down Taiwan Semiconductor stock. And TSMC was obviously a premium company. But the market started worrying about it not having enough working capital to produce the solvency with the chips. You remember that. And that basically marked the bottom. And so as a team, we invested a lot of our clients' money into many stocks. We didn't quite get the timing right, but directionally it was the right thing to do. And so that was a very rewarding period. And as a research director, the thing that actually gave me the most sense of reward and joy is to work with our young talents in the craft of being an analyst, the science and the art of investing, and to respect and understand risk, but to also not be afraid of taking them on the other side of the market.
Well, and what you found in the Asia financial crisis is you played a reasonable amount of offense and defense. You can't just play one during a crisis, and during the GFC, same. Where are the opportunities amidst all of the wreckage? And I think coming out of that, you all did a very nice job of finding those opportunities. But again, long term, if you're able to look at that with a 5 or 10 year horizon instead of a 5-month horizon, gives you a great advantage.
And that's the beauty of capital, in that we have investors who've been through all sorts of crises, right? And so it was not just the Asian financial crisis that the portfolio managers talked about. They talk about the S&L crisis in the US, a lot of the credit transmission mechanism and how it got resolved. And those were really, really instructive for our analysts.
So let's fast forward to today. You become a globalist or a generalist. So you take that small Asian region and you make it the world. Talk about your investment process today, because thousands of companies that you can invest in around the world. How do you find the right ones? How do you find a concentrated enough portfolio to generate real alpha, but diversified enough to have some downside protection? How do you do that when the world is your oyster instead of just the region?
Right. Well, being based in Hong Kong and invest globally, it's certainly not easy, with the time zone difference, especially now in this region when, the almighty US market is so big, right, representing close to 63 to 64% of the world index, and the US dollar being very strong versus the rest of the world currencies. However, luckily at Capital, we have a global investing muscle, a long-term orientation, and just fantastic analysts. And so I, in particular, leverage a lot on our global industrial cluster work. And so for those who are not familiar, we have industry clusters that are what I think probably the best in the world, because they individually do very good work on the stocks and the industry and the secular growth theme, but then they also collaborate and work very closely together. And I find that's such a secret sauce to pick what I call the greatest hits,
right,
in the portfolio
Sure.
Of global secular themes. And so let me give you some examples. Think about in semiconductors. In my portfolio, in our portfolios, we can have NVIDIA and TSMC, Taiwan Semiconductor, based in different places, but same theme. In kind of advanced pharma, Eli Lilly and Novo Nordisk, one in the US and one in Denmark. In aerospace, GE Aerospace, based in the US, and Safran, based in France. So the list goes on. And, I think our secret sauce is really that because our global cluster work is so powerful and we work so closely together, portfolio managers can work very well with analysts around the world to look at winners, but also to think about second derivative investment opportunities And I think one of the things that we do the best is cross-border valuation comparative work.
You know, what's interesting is I was looking the other day and everyone's talking about the Magnificent Seven, but then our folks put out a report that showed that the Magnificent Seven outside the United States in IFA has been done even better than the US. When it was stocks like TSMC and Toyota, UBS, HSBC, Siemens, SAP. So it was a whole host of stocks, like you mentioned. There's the U.S. stock that's really an industry leader, but there's also stocks outside the U.S. that are their own leaders, and sometimes they do even better. And finding that international opportunity for U.S. investors is really important. I just want to dig into the cluster a little bit. You really become an analyst of the analysts, and how they've done, and how their track record is, and how they express conviction. Do you follow certain analysts? Do you look at their portfolios every day, every week, every month, just to look at their highest convictions? How do you sort through their best ideas?
Yeah. So, the great thing about like our analyst community is that we have all sorts of different forms of investors. And I mentioned earlier on that everyone is encouraged to be the investor of this style. And so when you mention the analyst of the analysts, it's really true because, I feel that some analysts are really great bull market investors, and others are very good at picking cyclical bottoms, right? And so really knowing how to partner analysts at different economic cycles is a very important job of a portfolio manager. And I use the word partner because, we really work very closely with our analysts and we can learn so much from them. But, how we can add value is to really kind of give them confidence and say, hey, you remember that you picked this stock, when the market really disliked it, and play to their strength. Because we all go through ups and downs in our investment career. And I think at Capital, so much of what we do is to really give confidence of people's style, and so that they can stick to the stripe and generate the return.
I've heard you talk about investment journaling. What is that? I think it's a level of accountability and how you remember what you're doing and put it on paper and look back at it. But tell us about what it is and how it impacts your process.
Okay. So first of all, just step back. I'm a big fan of journaling, both personally and professionally. And
do you journal every night?
I journal usually every month.
Every month.
Yes.
Okay.
And it's not long. It's just very short. And I feel that we can learn a lot from others, but it's even more powerful to learn from ourselves. And I think we can learn a lot to reflect on our mistakes and sometimes success, and to learn about our blind spots, and more importantly, to kind of hone in our process. And for me, journaling is a really cathartic way of dealing with my pain, and there's always like no growth without pain, as the old saying goes. So investment journaling is particularly helpful for me. And the reason is because we all have our biases when it comes to investment. And I find that it's really helpful for me to work with my biases. And I learned a lot from my actions. And now actually with one of our technology-enabled app, we can put in like little journals in our app when we put in, a transaction. And so
why you did it. You remind yourself at the time, why am I buying?
Exactly.
Why am I selling?
And it doesn't have to be an essay. It's just usually a few words, so that I can remember why I did a particular thing. And I was very honest, and I'm very honest when I write, because these notes are for myself. And I can learn about my biases. The two biases that I continue to work on are confirmation bias and also recency bias.
Right. And do you find that you also write about what you did well? Or is it
well,
more?
We won't know, right? Because when we act, it's just really, why do I act? And so then
it's lifetime.
It's lifetime. So when I look at the stock, then I was like, okay, I was definitely having some FOMO there. That was not good.
Yeah.
Or, that felt very uncertain when I bought the stock. I should have bought more of it. Now, part of my weakness is that I'm still working on my sizing. My timing typically can be very good, but I don't go big enough into buying a stock at the bottom. So I'm still working on it after so many years. Gosh.
25 years still working on it. That's good. We can always get better. I'm going to pivot a little bit here. to the office treasure hunt, Winnie. And when in Hong Kong, and I love visiting Hong Kong, I lived there for 4 years, from 99 to '03. But when in your office, I stole things, as I tend to do. I'll return them. But I found these. And can you describe it? We have both listeners and viewers. For those listening, can you describe what I have from your office?
Okay, so these are like baseball cards. They're called John Lovelace cards, and I was lucky enough to have won a competition and was given these cards, and so they still sit in my office. And I'll just quickly describe what they are. So on the one side, they are different pictures of John Lovelace, who was our chairman and retired in the mid-year 2000s. So maybe 5 years since I joined the company. And on the other side are some really fun stats about our company's asset management and some of the history of our company. And I find these like fascinating. And first on John Lovelace, as some people know, he was the son of our founder, and then just an incredibly amazing leader. And so many people have talked about John Lovelace. And I didn't have many years of working with him, but I've heard so many stories about him over time. John was brilliant in identifying the art of that our difference makes us better. Mm-hmm. And he was the architect of the multiple portfolio manager system, which is such a hallmark of Capital Group's investment philosophy.
The Capital system came about in 1958.
There you go. Before everyone now talks about how our difference makes us better.
Right.
He always, his ethos is client first. And Mike, of all people, you believe in that.
I love hearing that.
Yes. And he had talked about it for many, many years. The last thing that I think John really had like such an impactful legacy on us was that he really understood incentives. And he understood what motivated people. And he appreciated different people's strengths. But more importantly, he was so generous to share the ownership of our private company to associates and future generations. That was just brilliant. Okay, now let's talk about some of the stats of our company. So I love like how in 1966, our asset management was $1 billion. In the 70s, and I was just reading some history of our company, we started investing in fixed income. And in 1978, our first international equity strategy started. And in 1980, our asset under management was $32 billion. Then we started investing in emerging markets in the 80s. And our asset under management in 1990 was, I think, $64 billion. And when I joined, it was $300 billion.
Right.
And now it's $2.5 trillion. So Capital was very early in global investing and the ability to invest across the capital structure, mainly for our US clients. But I think now we're ready to take our global investing capability to our global clients. And I feel that under your leadership, we're going to do that. And I'm super excited about the prospect of Capital.
Well, I couldn't agree more. We have an opportunity to serve more clients around the world with what we do well. But the John Lovelace cards, he was also a huge baseball fan.
Big time.
And so the John Lovelace baseball cards, those you got to keep these under wrap. Don't let folks like me steal them. They're good to have.
They are priceless.
Let's fast forward to some ideas and themes today. In emerging markets, give us one or two themes or stocks that you like right now.
So I'll step back and say the consistent theme of emerging market investing. I've started investing in emerging markets in 1996. The consistent theme is really quality of management because, growth is plenty. There are a lot of opportunities. But when there's a combination of a brilliant entrepreneur with a winning team, identifying a secular growth theme and someone who understands return and capital allocation, then we can have a stock that works for many years.
Right.
And so that's the backdrop. In terms of current themes that I think are relevant, there are three really. The first is continue supply chain diversification. And I think a few years ago, I contributed to a paper at Capital talking about the China plus one phenomenon. And now we have like the China plus N phenomenon, so multiple supply chain diversification strategy of basic manufacturing mainly. And the whole idea is about, kind of security, diversification, and clients want that. But at the same time, China continues to move up the value chain. And now actually, slowly and surely, also dominating in electric vehicle, renewable energy supply chain. And if my prediction is correct, going to be in automation as well. So that's theme number one. The second theme is really what I call the fixed asset investment driven growth in India. And as a result, the building of the middle class. Now, I was very lucky to have seen how China lifted 400 million people from poverty to middle class and what that means to stock market returns and also the depth and the width of the market. I think similar things are going to happen to India with the 30-year view. So very excited about that and lots of investment opportunities. The third theme, which I think not many people talk about emerging markets, but given our ability to invest globally, it's really relevant, and a lot of my portfolio is exposed to this theme, is aerospace. If you think about the biggest driver of aerospace and air traffic growth is really emerging market. On our count, 500 million to 1 billion people can afford a cheap ticket and yet have to fly for the first time. So aerospace and travel-related investment opportunities are plentiful.
It's a secular trend.
It's a secular trend. And interestingly, global air travel is yet to return to pre-COVID levels, mainly because the Chinese are yet to return to their old patterns of traveling internationally. So lots of opportunities there, some in developed markets and some in emerging markets.
Let's talk about your investment edge. You mentioned Rob. He was our first podcast guest, and he said time. And since then, all of the guests have had such interesting and different investment edges. What's yours?
So for me, it is about finding quality at bargain prices during economic and geopolitical concern and downturns. I find that quality in emerging markets seldom come cheap, because there's a premium for someone who is like really good at running the business, allocating the capital and growing faster than everyone else. And so it's really during a time when the market's concerned about elections, geopolitics, macroeconomic downturn, that we can use our strength at capital of the analytical rigor, our relationship that we've built with the management teams, and our long-term orientation, and our patience, really, to buy a lot of these stocks at bargain prices. So that has worked for me for 20 plus years, and hopefully it will continue to work.
You mentioned being here for nearly 25 years, big celebration next year for your 25th anniversary, I hope. I hope we do something fun. Who have been mentors to you? One or two folks, you mentioned Rob early on, but one or two other folks that have had a real impact on your career?
There are three. So the first one's Claudia Huntington. Claudia taught me everything about interacting with management, how to build a relationship, and how important management quality is. She's also a fantastic listener, a skill set that I yet to have to perfect and still working on it over time. Tim taught me everything about capital first and
Tim
building
Armour,
it into Tim
our
Armour.
retired CEO and chairman, Tim Armour. Yes.
He taught me how important it is for the team to succeed. The group, the team first before the individual. Jim Lovelace taught me the art of not rushing to act, but have enough conviction to make big changes when the time comes, and never close doors prematurely.
That's great. And Jim Lovelace, who is still a portfolio manager here, he does a great job of long-term holding, like really long-term holding. So not rushing to act makes a lot of sense. So what do you do for fun, Winnie? You and Mark, you travel a bunch. I know you've traveled a lot this year already, but what do you like to do for fun?
So family is a big one for us. So we love spending time with our kids. They're now studying, one in the UK and one in the US. And so as much as possible, we would like to get the family together. And we're excited that we'll be going to the Olympics
Great.
for the summer. And so we're excited about that. In terms of fun, my husband, as you know, loves running marathon. We're a very active family. I'm more into like water sports. So I like to wake surf and I like to do yoga and Pilates.
So what's Mark's next super ultra marathon something? Is he going for 500 miles this time? What's his next effort or event?
So last year he did the Andorra race, and that's a qualifier of the Ultra Trail Mont Blanc. And this fall he will be doing the marathon in Philadelphia because our son is going there to start school. So he will drop our kid in school, and then he will run the marathon.
Yeah, walk in the park for Mark. We're going to finish up with an obsessively grateful moment. We like to call that. I always like to talk about gratitude. I'll start while you think of yours. This past weekend, I've been doing a lot of travel. I just needed to rest. And I love walking on the beach and looking for sea glass. So for those who are listening, not watching, behind me, you can see the sea glass find from this past weekend. I am grateful that this was one of my best days. Sometimes I go out there and find nothing. This happened to be a day where I just found an amazing assortment of sea glass. It was calm. I was able to go out there for 2 or 3 hours and not think about anything else in the world. So I was grateful just to have that moment, that opportunity to take a step back from work, relax a bit, and do something I find enjoyable.
Oh, fabulous.
What about you, Winnie? What's your grateful moment?
So I am truly grateful for what life has unfolded for me in terms of being able to work as a woman at Capital. And it's not easy to balance roles, especially when I was a mother of young children, and the travel that's required of a global portfolio manager. I was very lucky that Mark had already graduated from a career of finance and started our family nonprofit 15 years ago. That gave us the opportunity to balance our travel, and someone is always at home with the kids, and that was really helpful. But I'm also extremely grateful to Capital Group. The flexibility that's given to women and a working mother is tremendous. When I was at home, there was no time that I felt that I couldn't go to a parents-teachers interview or my kids' sports games, or just being there when they need me to be there. And so I feel so grateful that my family life and my company are both so supportive of my work, which I'm passionate about.
Well, we're grateful for you. 24 years at Capital Group, a Morningstar Female Manager of the Year. I'll finish where I started in congratulating you on that. 25th anniversary next year. Big celebration to come. So thank you for joining us. We appreciate it.
Thank you for having me.
Before we end, I'm going to hand you the gratitude mug.
Oh.
But it's important that we give you this mug. And we are grateful for you. And now you can have officially the world's largest mug.
I love a good cup of very strong English tea. So this will be my tea mug.
Good. Thank you. And thank you for joining us again. I hope you join us next time on our Capital Ideas podcast. Have a great day.